The question is, are we on track to fulfill our objectives of this operation? To bring out our people, so many of those Afghans who helped us, and so many of those Afghans at risk. And we believe we are.
Our engagement in Southeast Asia and the Indo-Pacific is not against any one country, nor is it designed to make anyone choose between countries.
I think he's articulated what the Fed's policy is in a very clear and consistent way, so I don't see any reason why he wouldn't be reappointed.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 24th of August. I'm Francine Lacqua here in London, and here's what's coming up on today's program. European stocks extend their rebound after the FDA approves the Pfizer-BioNTech shot. Joe Biden urges companies to impose vaccine mandates on staff. U.S. president is set to face calls from allies to extend the evacuation deadline in Afghanistan. G7 leaders meet virtually today. And Chinese tech stocks rebound from near-record lows, boosted by a buyback from Tencent and Cathie Wood's backing of JD.com. Now, joining us to talk everything markets, and I mean everything markets, is Eddie van der Veld from our MLive team. Eddie, first, I know you want to talk about gold. I know we have stuff on cryptocurrency to talk about. But actually, it's crazy. 24 hours, you get an FDA approval, absolutely, like a full approval. And now suddenly everything's on track, and actually the economy is fine, and the markets are up.
Absolutely, there's nothing like price to change sentiment, right? Look, I think there's a lot to be optimistic about out there. I think one of the big things actually is this idea that we're sort of in a reverse Goldilocks at the moment, if you see what I mean. There's just enough doubt about the Delta variant that the economy, that the central bankers will worry a little bit about tightening policy at this point in time. Yet growth is quite quick, and we're seeing this dip buying in China, and I think that's helping sentiment a lot. Yeah, I mean, technology stocks were definitely up in China. We had a Morgan Stanley note that was quite interesting, actually, with one of the analysts saying, you know, this is the time to buy casino and cruise ships. Is timing everything as we get into the winter months? I read that note, and it's really interesting that, you know, the talk that this is the moment to really get in on the reopening trade, because I thought that's what we've been doing since last March, right? But I get it. You know, there's a lot of liquidity in the system still. The central banks are a little bit cautious about raising rates too soon, and yet, you know, we're seeing people getting vaccinated around the world, and we're seeing that happening faster, and we're seeing, you know, mortalities are not picking up as quickly as they had in previous rounds of infections. So I think there are reasons to be optimistic underneath all of this. Eddie, Jackson Hole, dun dun dun, the big one. But are we expecting too much of Jackson Hole? You know, I think the central bankers will be, like I said, cautious, particularly the fact that they have been forced into doing this virtually, right? I think that sends a powerful message to central bankers that this has not gone away. There are going to be problems going forward. So Jackson Hole is going to be pivotal one way or another. But I think at this moment in time, the pivot is slightly more towards a cautious central bank. Okay, I need to ask you about cryptocurrency, because actually there's an ATM in El Salvador. I mean, suddenly, I know we've been talking about El Salvador quite a lot, but you can actually trade transaction. Yeah. Are we going to see that kind of move from other countries? You know, I mean, the cryptocurrency space is really interesting at the moment, because I think, on the one hand, yes, there is this push towards Bitcoin as a currency, but I think there are more important things happening in Ethereum and, you know, other cryptocurrencies. And I think that's really where the interesting developments in the space are happening. Eddie, thanks so much. Eddie van der Veld there from our MLive team. Now, we're also joined by Francesco Sandrini, Senior Multi-Asset Strategist at Amundi. Francesco, thank you for joining us. A lot of questions, of course, on the markets, a lot of questions, especially on the kind of markets that we've seen over the last 5 to 6 weeks, which is one day you buy on the dip, the other day there's concern about the economy, the next day, you know, markets forget about the economy. Are you worried about some of these moves, some of the choppiness, maybe in the short term, basically, in the next couple of weeks?
Yes, of course. It's a very misty situation, first of all, because there are There is a macroeconomic backdrop, first of all, where we tend to see some weakness developing. If we have a look to the consumption patterns in the United States, but also the manufacturing, the Empire Index that has been released, we see that we have already been peaking in terms of macroeconomic activity, and this is the direction we are going in Europe as well, despite of the good numbers in terms of PMI we saw yesterday. So there is a macroeconomic situation which is slowing down. Then, of course, there is the entire discussion on Jackson Hole. You discussed that before, and this is going to be perhaps an event that is less important than originally thought. And then, last but not least, what comes out of China. We have two situations developing in Asia. China, per se, is quite an idiosyncratic situation with a wave of regulation developing and mounting. And this is the so-called Common Prosperity Program that has still to be digested and understood by Western investors. The second one is in Southern Asia with COVID.
So, Francesco, overall, are you expecting equities to actually continue rising? So this is, what we are trying to figure out. And if you look at the difference between people who believe that the S&P 500 falls and the ones that think that it actually rises, that gap hasn't been wider in a decade. So what's your take on it? Are we going to see momentum continue into these markets, or is it really time for a healthy correction?
It's time for an healthy correction, we believe, because of the reasons that I was outlining. Will not be a very deep correction because the fundamentals are still quite resilient. But that's the time where we need to have some hedges in place because of the mixed situation I was describing in terms of macro and in terms of regulation coming.
So what kind of correction are you expecting? And does it actually impact most asset classes?
We are expecting a correction on the equity markets between 5 and 7%, primarily because of the fact that margins are historically very high. We are coming out from an earnings season in Q2, which has been extremely positive. A lot of companies have been raising their prices to respond to increasing pressures on the cost. So the situation is a situation with valuations that are quite stretched. We deem this approach, this environment, very fragile. And in this fragile environment, monetary conditions, macroeconomic slowdown affecting growth, and slowing down in key regions like China, including the COVID situation in Southern Asia, can be a problem for this kind of growth model.
So, Francesco, do you believe that actually treasuries at the moment are probably the safest assets because they're priced correctly?
Yeah, we don't think that the treasuries in this phase will increase their yields meaningfully. They will trade on a range for quite a foreseeable future between the 120 and 130. And then, of course, little by little, they will increase. But it can easily be the case that credit is a nice place to be at the moment, at least awaiting a change of inflation regime that at the moment is difficult to foresee. So, yes, we need to keep the portfolios extremely balanced in this phase, keeping committed to risky assets, but with hedges in place, because whilst at the same time the macroeconomic conditions are still resilient, there are issues that could hamper and have a negative effect on very high valuations that have been developing during the summer.
Francesco, thanks so much. Francesco Sandrini from Amundi stays with us, and we'll talk a lot more about some of these lofty valuations that Francesco was just alluding to. Now, you can catch all of our special coverage of the Jackson Hole meeting right here on Bloomberg TV. That's on Friday at 3 p.m. UK time. Coming up, oil's steady after its biggest surge in months. Iron ore jumps as investors hope for more infrastructure stimulus in China. We'll dig into all of the latest commodity moves next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Francine.
UK Defence Secretary Ben Wallace has acknowledged it's unlikely the US will extend an August 31st deadline for leaving Afghanistan. The evacuation from Kabul is set to dominate a virtual G7 summit convened by Prime Minister Boris Johnson later today. The Taliban has warned the August 31st date is a red line and that it will take action if soldiers aren't gone by then. Now, the US Vice President says Beijing poses a threat to countries in Asia and is using coercion and intimidation in its territorial claims in the South China Sea. Speaking in Singapore, Kamala Harris laid out America's vision for a region built on human rights, freedom of the seas, and unimpeded commerce.
Our engagement in Southeast Asia and the Indo-Pacific is not against any one country, nor is it designed to make anyone choose between countries. Instead, our engagement is about advancing an optimistic vision that we have for our participation and partnership in this region.
And campaigners have singled out big accounting firms for failing to highlight green issues as protesters gather in central London. Hundreds of Extinction Rebellion supporters assembled in Trafalgar Square on Monday as they started 2 weeks of protests over climate change. The group says accountants are complicit in greenwashing. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, commodities are in focus again today as expectations of a recovery in economic growth are buoying assets. Iron ore futures in Singapore have surged as much as 8.7% following the approval of the Pfizer-BioNTech vaccine in the U.S. After jumping more than 5% yesterday, snapping its worst losing streak since October 2019, oil holding on to gains this morning. Bloomberg Intelligence, though, says this optimism could be short-lived, at least for oil. Our analysts say that Fed taper talk could see oil slump back below $50 in the next 2 months. Well, we're back with Francesco Sandrini from Amundi. Francesco, if you look at some of the benchmark and some of the assets, it's very clear that commodity-rich currencies and commodity-rich industries have also swung around quite a lot. I mean, what's your take on commodities overall?
That there are no these situations to see a commodity super cycle developing for a lot of reasons related to the leverage cycle as well. So we think that commodities are approaching a level which is their equilibrium level. So it's difficult to see this continuing. Because of this reason, we see that all the sectors that are related to commodities, like the cyclical sector, some of the value sectors, I'm referring to materials, I'm referring to energy, are perhaps still a little cheap, but not very far from their fair value. So that's exactly also what the market seems to discount. The market pays a lot of attention to a lot of quality sectors, trying at the same time not to be too committed to all those value sectors related to commodities that seems to be, to some extent, arrived to the level in this business cycle. So we do not think that there is still a big upside.
Yeah, so there's not a big upside in your... I mean, we're talking about some of the lofty valuations as well, Francesco. I don't know how much you look at China. I know we talked about it a little bit, but how much do you look at some of the exposure of stocks to China right now?
Yeah, China at the moment is a big question mark for everyone because there is a huge wave of regulation coming. We have already seen 32 regulation act only in the last 12 months in a lot of sectors, starting for technology. So talking about valuation in this environment in China is extremely difficult. Said that, having this transition in motion, from an historical point of view, China and the world conglomerate of the emerging markets look cheap. But it's a cheapness, in our opinion, that is still a little problematic to create a catalyst to enter into emerging markets, because it's a little like catching a falling knife. So we need to have more visibility on how the regulation will affect the profitability of companies, especially in China. And this is an important driver. So because of this reason, we try to be quite cautious in emerging market despite of valuation. Of course, in emerging markets, every metric is better than the one that we are seeing in the developed markets, where from every point of view, price earnings, price to book value, price to sales, companies are getting a little expensive with very high margins historically.
Francesca, is there anything actually in the emerging markets that you would look at right now, though?
I think that is very important to try to be on board on some of the themes that will shape the future in China. So we need little by little to consider to enter in sectors that will benefit from this huge wave of reforms undergoing. Consumers, healthcare, those are typically the sectors that are catching our attention in this phase, right, because we are in the middle of a big transition that will try to reduce the profits of large corporations in order to improve this common prosperity program that Xi Jinping seems to be quite keen to discuss during his program. These are the sectors we are looking at.
Francesca, what do you do with gold right now? I don't know whether you look at gold or cryptocurrency. I know it's a loaded question.
No, we cannot look at cryptocurrency as a company. We made these decisions. So we are looking a lot about gold. Gold is an asset class that normally benefits from real interest rates going down. So this is a good situation, and this is the reason why you are seeing some rebounds in the gold valuation approaching the 1800. Gold will benefit a lot from what will be discussed in Jackson Hole, especially on Friday with the testimony of Jay Powell. And until when interest rates will continue to stay extremely low and real rates in a negative territory below 1%, gold will be a good asset class to be invested. I think that after the cyclical rally we saw in November last year, this is a good environment to stay exposed in gold as an hedge also.
Francesco, thank you so much. As always, Francesco Sandrini, their senior multi-asset strategist at Amundi, joining us this morning. Now, coming up, Chinese tech stocks rebound on buying from Cathie Wood and Tencent. We'll look at that story next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Chinese technology stocks rallied for a second day as sentiment was boosted by Tencent's buyback and as Cathie Wood also bought back into JD.com after a strong set of results. Beijing's crackdown on tech firms, though, persists as the ride-hailing giant Didi shelves its European expansion plans amid ongoing drama with authorities. Well, Bloomberg's Tom McKenzie joins us now, the expert on China. Tom, first of all, good morning, and it's so nice to have you in the studio. I mean, what's crazy with some of these Chinese technology stocks is that they're down, they're down, they're down. Oh, no, today they're up. And this kind of has to do also with some of the support maybe from PBOC?
Possibly, yeah, and not just up a little bit, a lot, right? I mean, the likes of JD.com up more than 15% the last time I looked. Of course, the session in Hong Kong has just closed out. But you're seeing gains, double-digit gains for the likes of Tencent, Meituan, JD, as I say, Alibaba posting some strong gains in the session today as well. So part of it, you did have the PBOC coming out and saying we are going to support and ensure there's enough credit in the system after that drop-off in July, particularly focused on SMEs and the real economy. That was the quote from the PBOC Governor Yi Gung. This seems to be more about valuation. So the Hang Seng Tech Index, it's down close to 40% year to date. The RSI was suggesting that it is oversold. So you had a dip buying, very aggressive dip buying, it seems, over the last 2 days. That index now is close to 9% gains just over the last 2 days. And it's the lack of new initiatives on the regulatory front. It hasn't gone away, but we haven't had new initiatives spelled out.
So who's dip buying? Like I keep on reading, Cathie Wood, the great believer in Chinese tech, in Tesla and cryptocurrency, has basically been buying some of these stocks up.
Yeah, and this was just a few weeks after she essentially said she was zero on exposure to Chinese equities. But this is the debate that's been going on, and you've been having this with your guests. I know it's to whether or not China is investable or not. And it's still mixed in terms of what we're hearing. But clearly, there are enough investors on the sidelines with cash ready to get in at the right price. And that's what we've been seeing over the last few days, and particularly when it comes to some of these blue chips, as Alice has been telling us, where the fundamentals longer term, if you're prepared to hold for 6 months plus, according to one of the people quoted in BN story today, then you're looking good because the fundamentals for these companies, despite that regulatory pressure, remains for the long term at least solid.
Okay, Didi. So I'm imagining that actually Uber drivers across all of Europe are saying, okay, they're not coming into Europe right now, and this is because of concerns over what they do with their data.
Yes, so they, of course, have faced scrutiny in Beijing over how they handle the data there. Now there's a concern about the scrutiny they might face in other jurisdictions, in Europe, UK, Germany, France. Those are all countries that they had planned to expand into this year. The Daily Telegraph reporting they're going to shelve those plans for at least a year. Our own reporting suggesting that some of the headcount that they've been adding in places like London, but also Germany and France, that's going to be scaled back. Part of that, again, is scrutiny from lawmakers in the UK, those other jurisdictions. That's a concern. Uber has a more than 10% stake in DD, but also going toe-to-toe in Europe would have been a challenge for that company, certainly. So some relief, as you say, for Uber in Europe, at least.
Now, underpinning all of this, and I really want to ask you about, regulation. We kind of sometimes forget, there was the National People's Congress last week, and they kept on reminding us that this is about a healthier and also more equitable society, so crackdown could continue.
Absolutely, and what we're looking for is how that crackdown is implemented. So fleshing out the framework in terms of that regulatory push in areas from healthcare to real estate to technology to education. We have the framework, we saw that with the 5-year plan. What we're looking for are the details as to how the changes in rules affect those individual sectors and how they are applied as well, because it's implementation that's also always key.
Tom, thank you so much. Our Tom McKenzie, they're our expert on China. Now, later on, we'll also be speaking to ARK Invest Chief Executive Cathie Wood on the company's outlook, including its recent buyback of JD.com shares. That's at 4 p.m. New York time, 9 p.m. in London. Don't miss that interview. Coming up, we talk about the G7, we talk Afghanistan, and of course, Kabul airport. This is Bloomberg. European stocks extend their rebound after the FDA approves the Pfizer-BioNTech shot. Joe Biden urges companies to impose vaccine mandates on staff. The U.S. president is also set to face calls from allies to extend the evacuation deadline in Afghanistan. G7 leaders meet virtually today. And Chinese tech stocks rebound from near-record lows, boosted by a buyback from Tencent and Cathie Wood's backing of JD.com. Well, good morning, everyone. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance Early Edition on this Tuesday, the 24th of August. So Joe Biden is set to face another grilling over his withdrawal from Afghanistan today. The president's closest allies, including the UK's Boris Johnson, are set to ask for an extension to the window for evacuating civilians from Kabul airport at the G7 meeting. Now, this even as the U.S. says it's on track to get all Americans out of the country by August 31st. The Taliban have warned of consequences if there is a delay. Here's U.S. National Security Advisor Jake Sullivan.
The question is, are we on track to fulfill our objectives of this operation, to bring out our people, so many of those Afghans who helped us, and so many of those Afghans at risk? And we believe we are.
But for some, it is the manner of the withdrawal that is the greatest cause of concern. Leslie Vinjamuri, head of the U.S. and Americas Programme at Chatham House, says that America's decisions has set the stage for a crisis of confidence amongst its closest partners. Well, we're joined by Leslie Vinjamuri. Now we're also joined by our opinion columnist, Bobby Ghosh, who today has been writing about Joe Biden's belief that the Taliban is suffering from an existential crisis. So thank you both for joining us. Leslie, if we start with you, who is having the most existential crisis? I mean, is this one of the trickiest situations for Joe Biden, maybe more than the withdrawal, the way in the way it has been done? We see pictures every day harrowing from Afghanistan and Kabul airport.
Well, Francine, as we all know, this situation is by far the worst for those people in Afghanistan, and especially those people who have no hope of leaving and won't be favored by the Taliban. So I think that is, as we all know, the first and most important priority is that humanitarian situation. Obviously, Joe Biden has felt very strongly about pulling the United States out of Afghanistan. This goes back to around 2009, possibly earlier. So for him, it's painful to see it unfold in this way. His decision has been deeply challenged by the UK, by NATO, by Europe, by many in the US. But again, many Americans have wanted to get out of the so-called forever wars for a very long time. Nonetheless, dealing with this level of crisis at the same time, bear in mind that COVID is spreading across the United States at higher rates than we've seen for several months. And there are question marks about his domestic agenda. So this is not a nice time for the president, but he is seeing through something that's absolutely critical to his foreign policy agenda.
Bobby, U.S. President Joe Biden basically says that, the Taliban are going through an existential crisis. You very well thought, in a very well thought out article, you explained also that, the Taliban have to govern a country which is much bigger, which is much younger than 20 years ago. It doesn't seem they have an existential crisis because the funding keeps on coming.
Well, yes, they're not well known for self-analysis and self-doubt, the Taliban. They are a very good fighting force. They're capable of raising funds to keep an insurgency going. It seems like President Biden, needs the Taliban to have changed. So what he's saying when he says that he thinks that they're going through an existential crisis, when he says that he thinks they want to be part of the international community, they want to be part of the global economy, he needs that to be true because he's made a huge gamble in Afghanistan that depends on the Taliban having changed, that depends on the Taliban behaving in a responsible, recognizable fashion. But the Taliban are not signaling the same things. Never mind what their spokesmen say in press conferences. In parts of the country that they have been running for now several years, they've not been behaving in any new way. They've not been showing anything to suggest that they're interested in change.
Leslie, this also points to, I guess, massive intelligence failures, right? It's unfathomable to think that just 2 weeks ago we were talking about Kabul falling within, 3 to 4 to 6 weeks, and actually it took 3 days for the Taliban to come over. How does America today understand Taliban and Afghanistan?
Well, on the question of intelligence, there are certainly reports coming out that there were cables from the State Department expressing the urgency and the rapid strength of the Taliban, that the CIA had issued warnings. Nobody knew how quickly this would happen, but there were certainly plenty parts of the US government, of the intelligence agencies that had expressed this concern. But intelligence is a tricky business. Ultimately, this was a policy decision. It was a decision taken by the president. But we are going to be hearing the analysis of this for a very long time. I think, Francine, that one of the things that will be critical now is people will evaluate President Biden. They will look to Afghanistan in the course of these next few days and next few weeks, certainly the days approaching the August 31st deadline. Then how this is handled over the next couple of weeks is absolutely critical. But then remember, and this is, getting to the G7, those broader questions about how to manage, stabilize, invest from a humanitarian perspective in Afghanistan, prevent a terrorist threat reemerging. These are all very difficult, very challenging, very important questions that are going to be difficult to manage when there's no international presence within the country.
And Bobby, we also hear of door-to-door manhunts, right, happening in certain parts of Afghanistan. Are the Taliban united?
Well, yes, they're united. That doesn't mean that they are a monolith. There are different factions within the Taliban. As is often the case with insurgencies, there are parts of the group that are more extreme than the other parts. But to the point that Leslie was making just now, these questions that the Western world has to ask themselves, these are questions that should have been asked and discussed by the people who will be meeting in the G7 meeting today. They should have been discussing these things before Biden made the announcement. And that's the big frustration for America's allies in the G7, that they were not properly consulted, that Biden did a Trump, essentially, and pulled the rug from under their feet. And they're now struggling, they're scrambling to try and deal with the consequences.
But Leslie, do you think that they weren't consulted, or it was just a massive failure of analyzing the situation on the ground?
It's clearly very complicated. Anybody who was listening to President Biden throughout, frankly, his time as vice president on through the campaign trail, through his inauguration, knew that it was a question of when rather than whether, a question of how. Obviously, it's a decision that was seen to be and seems to have been unilateral in the moment that it was made. Consultation wasn't what it should have been. And I think the G7 is going to be working very hard today to demonstrate to the world that they are aligned at a time when clearly there's a lot of fracturing, but the need to come together on these big questions of, will there be sanctions? How will the question of recognition be dealt with? How will the grave problem of immigration, of refugees, of investment in those processes? All of these are critical. It's a time to pull together, but very difficult When the United Kingdom, we saw that fierce debate in Parliament, and so many others feel like they weren't consulted. But this is a president who feels passionately that America has overspent, it has overinvested, it has taken a toll on boys and girls, men and women, American citizens, and others who really shouldn't be there. When there's a mission that hasn't been focused and hasn't, frankly, had the chance of succeeding beyond that very narrow and very immediate goal, which emerged right after 9/11, which was getting rid of al-Qaeda, the threat to the U.S. homeland, and to really manage that terrorist threat. The president feels like that goal was achieved, frankly, quite a long time ago, and that the U.S. simply shouldn't be in.
Will radicalize other countries?
Well, it'll certainly send a signal to radical groups and insurgencies around the world. They will feel heartened by what they regard as the Taliban success. We're already seeing congratulatory messages to the Taliban pouring in from other Islamist groups around the world. And it'll make America's allies around the world wonder whether the United States has their back.
All right, thank you both for joining us, Bobby and Leslie there. Leslie Vinjamuri, head of the U.S. and Americas Programme at Chatham House, on our Bloomberg opinion columnist Bobby Ghosh joining us this morning. Now, coming up, Kamala Harris kicks off her trip around Southeast Asia by warning countries about the influence of China. We'll talk more with Leslie Vinjamuri about America's role in the region. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. The boss of the world's biggest index provider has shaken off concerns about the investability of Chinese stocks following Beijing's recent crackdown. In an exclusive interview, MSCI Chief Executive Henry Fernandez told Bloomberg TV that China's markets have quickly rebounded in the past.
To see how it all shakes out, but I think it's important to keep in mind that countries go through periods like this. There's no country that is exempt about this, including Western countries.
And Richard Branson's Virgin Orbit is going public in a SPAC deal that values the satellite launching company at $3.2 billion. The merger with NextGen Acquisition is expected to provide the new company with $480 million in cash, bolstering its capital until regular launch operations are expected in 2023. Boeing is among investors putting $100 million into the company. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, Vice President Kamala Harris has warned that China poses a threat to countries in Asia, whilst reassuring nations in the region that the U.S. won't force them to choose between the world's biggest economies. She made the comments in Singapore during the first leg of her trip to Southeast Asia, where she reiterated Washington's commitment to the international rules-based order.
In this region, we have long put forward a vision of peace and stability. Freedom on the seas, unimpeded commerce, advancing human rights, a commitment to the international rules-based order. Now, as we face threats to that order, I am here to reaffirm our commitment to that vision.
Well, still with us is Leslie Vinjamuri, head of the U.S. and Americas Programme at Chatham House. Leslie, if you look at the U.S.-China relationship, I mean, it seems a lot more complicated than at face value.
Absolutely. And, what's very interesting about the vice president's trip is it's, signaling on many dimensions that despite, to our earlier conversation, the crisis in Afghanistan, that the United States is going to remain very focused on that strategic relationship, on the so-called China challenge. And, Kamala was saying very clearly that China is a threat in the South China Seas to the rules-based order. But she was also then subsequently signaling that positive agenda of cooperation. You don't have to choose if you're a neighboring country in Asia between the United States and China, which of course is what they all fear for very good reason. and also setting forth a series of measures on which the United States and Singapore will begin to cooperate and drive forward a positive agenda in which the United States has an influence over the region. I think people have been waiting to see whether the United States will have a more developed strategy, not only towards China, but importantly, across the region on the economic front. Part of the measures that have been announced are about climate, which of course is right at the top of the agenda for cooperation globally, but especially in Asia. One of the U.S. semiconductor firms announced on the back of the vice president's speech that they would be increasing their investment in Singapore and semiconductors. So all of these measures, again, very important signaling, given the timing, that the United States will take those challenges very important and move forward on that agenda.
Leslie, so on timing, because we don't have a trade war, or at least not as explicit as under Trump, is that why we're seeing this regulation from China? Do they feel emboldened by this administration?
I think that China understands the stakes are very high, that this is an administration that, as you indicate, is moving far beyond, intends to move more comprehensively towards thinking about the threat that China poses economically across a number of dimensions. It's a much more serious game. There's a pause right now because of Afghanistan. I think there's a question mark about whether the United States will lose its way, lose its strategic focus, and whether the U.S. and its European partners will disintegrate in terms of their ability to cooperate with respect to China. So China's watching this carefully. They're watching the G7. Of course, they're very deeply concerned about what will be coming out of the United States. And this is the sort of first signal of that.
Leslie, on the domestic front in the U.S., Nancy Pelosi is also trying to resolve this showdown, this very important showdown that we've seen, for example, in the House on the economic plan of Joe Biden. So she's trying to resolve the showdown between a group of moderates on, the economic agenda. If she fails to do so, it could put the $3.5 trillion budget blueprint at risk. Some more moderate Democrats, while backing the $550 billion infrastructure bill, are also nervous about the price tag of the full budget. So can Nancy Pelosi keep it together?
Well, this is really a challenging moment for her. It is exactly what we expected to see at one level, trying to balance the progressives in her party, the moderates, and to deliver. She's very committed to delivering on Biden's economic agenda. Of course, it seems unlikely that she'll get that full budget through. The question, I think, is not so much whether it gets through or not, but in what form. At what level, what measures are taken off, what do those negotiations look like? But the sequencing here is really the interesting question. And the fact that so far Nancy Pelosi seems to be making the decision to put forward the budget first and infrastructure second, of course, not something that's making the moderates happy at all. They'd like to see that infrastructure, which has bipartisan support, delivered quickly, in timely fashion, so that they can benefit. It's desired by the American people, but it's also politically popular. But I think that Nancy Pelosi doesn't want to give that until she's gotten that broader agenda through. So it's going to be a very tough negotiation. She's certainly got a lot of history and a lot of experience doing this kind of work, but it comes at a very difficult moment where a number of people are worried about inflation, they're worried about spending. And now they're in, again, is this distraction of Afghanistan, distraction from the perspective of the U.S. that's raising questions about Biden's ability to govern.
Leslie, thank you so much. Leslie Vinjamuri, the head of the U.S. and Americas Programme at Chatham House, joining us this morning. Now, coming up, hedge funds are hot again. The industry is off to the best start since 1999. Investors risk missing out, though. More on today's big take story next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, weak returns, dizzying outflows, and poor prospects. That's been the story for hedge funds in recent years. With central bank intervention draining volatility out of markets, active managers have actually struggled to beat cheaper index trackers. But the tide is also turning as a group of hedge funds are off to their best start since 1999. Now, for more on all of this, let's get straight to our hedge fund reporter, Nishant Kumar. Nishant, first of all, congratulations on a wonderful big take. I know it's out today, and I urge everyone to read it on our website or on our Bloomberg terminal. So what's behind the hedge fund comeback?
It really has to be performance, and performance in a tough market like last year. One of the key factors that led the decline in the hedge fund industry is some of its big blue chip names were struggling for much of the last decade. That all changed in a big way last year. So you had likes of Brevin Howard, Caxton, Millennium, of course, Citadel, all the blue chip names doing really, really well when the market conditions were challenging. And that kind of has infused new confidence in the industry. And with stocks at record levels, bond yields are so low, maybe investors are thinking that to protect the downside, maybe they can go to hedge funds. And that's why inflows are also returning to the industry.
Yeah, so how big, Nishant, of a turnaround are we actually talking about?
There are different ways to look at it, but I think one of the most important yardstick is to look at how many funds are basically close to investments. So that number has hit a record level. Who is who of the industry, the blue chip names, most of them are closed. That kind of shows that the industry is reaching its capacity. So there is no longer billions of dollars that these funds can manage. So that's one very important factor. Another one is that if you really look at last decade, AUM of the industry doubled to $3 trillion, but not a single dollar came through net inflows. Now that is changing. Tens of billions of dollars is flowing into the industry, especially to the larger players. And AUM has crossed $4 trillion. And that's a very significant milestone for the industry. But the factor that enthused most of the investors the most is the fertile trading hunting ground for traders. So there is that inflation risk, there is volatility coming back. And all that is creating very good environment for hedge funds to maintain their track record and make money.
Nishant, why are hedge funds actually closing, trying to close off actually to new money?
Well, unlike ETF industry, which can quickly raise $1 trillion and deploy in a month, say, capacity is really a problem for hedge funds. There is so much alpha available in the market. So it's a very wise move for hedge funds to close funds at a level which they are comfortable at. One of the problems why industry suffered the most last decade is because too many funds raised too much money very quickly, and they could not take advantage of swift market moves. So that's why it's very important that this time around hedge funds are being cautious and closing at the right level so that they can take advantage of these big moves.
Nishant, thank you so much. Bloomberg's hedge fund reporter there, Nishant Kumar, with our big take. Now you can catch all also of our special coverage of the Jackson Hole meeting right here all week. Coming up, more Bloomberg Surveillance Early Edition. Matt Miller and Kailey Leinz join me. This is Bloomberg.
We fundamentally disagree with the thesis that China is now uninvestable. And that is not what we're speaking to our clients about or hearing from our institutional clients.
There's been a lot of criticism of China in terms of lack of compliance, of lack of regulatory oversight. So they're now exerting their regulatory oversight. So we criticize them on the other side as well.
When others have worried about things the Chinese are doing the past 30 years, they've always been wrong. The Chinese seemingly get it right. But this is a more tricky time for them to do these things than, in my view, than it's been in any of the past, certainly 20 years of BRICS and probably earlier.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Tuesday, August 24th. Our top stories today. It's a risk-on mood in global markets. Chinese tech stocks bounce back thanks to a couple of prominent buyers. Waiting to see if the economy will really reopen, well, one Morgan Stanley money manager says buy now before it's too late. And Joe Biden's foreign policy fronts, well, his vice president blasts China, while allies want him to delay a U.S. troops withdrawal from Afghanistan. Well, good morning, everyone. Francine Lacqua here in London. Kailey, of course, in New York, and our Matt Miller in Berlin. Kailey, if you look at the market, so we're seeing a nice bounce back after, I think, the worst week in about 6 months last week. And they seem to be focusing now on the fact that actually, even if we have COVID-19, we're not going to see a derailing of the economy. And of course, Chinese tech stocks on a tear.
Yeah, absolutely, Francine. The rebound in Asia continuing for a second day. Actually, the best 2 days for the MSCI Asia Pacific Index since all the way back in February. It was really green across the screen. We were up 0.9% in Japan, 1.6% in South Korea, higher by about 1% in China, and then Hong Kong, really the outperformer, up about 2.5%. On the one hand, you have the PBOC pledging support for credit, and on the other, you do have the bounce led by Chinese technology companies. The Hang Seng Tech Index actually up 7% today. One of the big outperformers within that was JD.com, which of course reported results yesterday pretty strong, even in the face of regulatory scrutiny from Beijing. That stock popped 15%, I should say, in the Asian session. In other asset classes, I did want to point to the Thai baht. That is your big outperformer in Asian FX amid speculation now that COVID is indeed peaking in Thailand. It's stronger against the U.S. dollar by about 0.75%. And then in the commodity complex, a big bounce for iron ore futures, up 8.7% in Singapore, because that PBOC policy support is lending to the idea that economic growth will indeed be better. As for what the picture looks like here in the U.S., we closed just shy of a record high yesterday, and once again, futures are in positive territory this morning. We're up about 0.2% on S&P E-minis. Some selling in the bond market, yields ticking up a basis point on the 10-year to 126. The dollar was weaker earlier, now slightly stronger, but that isn't dragging on crude. WTI, of course, rallied 5% yesterday. It's up another 0.7% this morning to $66.12 a barrel, Matt.
All right, I'll be looking at crude as well from the Brent standpoint. But first off, take a look at what's going on in markets with this map. If you want it on your Bloomberg, there's a really efficient way to get it. Just type WMGO. And you can see we've got a little bit of a loss here in Spain and Portugal, the Iberian Peninsula, at least not doing well today. France also down a little bit. Italy not making a lot of forward movement. We are seeing gains in Germany, and that's enough to hold the stock 600 higher right now by about 0.1%. The euro is down at 117.28. You were just hearing from Kailey about the gains in the dollar. Gold is off a little bit, but still holding over $1,800 a troy ounce. So gold at 18.01 right now. And then Brent crude, which is really the global benchmark, getting back closer to $70 a barrel at 69.36. The interesting thing, I think, Francine, I know we're going to talk about Andrew Slimmons' comments from Morgan Stanley about buy the reopening trade before it's too late. The leaders here in Europe in terms of groups are travel and leisure, or as you would say there in Great Britain, travel and leisure, as well as automakers and auto parts. So it looks like the market really is taking Slimmons' advice when it comes to buying. Either they're buying the reopening trade or they're buying the dip and tending towards those stocks.
Yeah, I quite like it. They're kind of like, risk-on mood, let's go, and even buying cruise ships. So we'll get back onto some of the trades, Matt. This is what else we're watching today. So it is August, but actually we're quite busy. Kamala Harris arrives in Vietnam, becoming the first U.S. vice president to visit since the war ended in 1975. The Paralympic Games also begin with the opening ceremony in Tokyo. It's Kathy Hochul's first day as New York governor after replacing Andrew Cuomo. We'll get U.S. new home sales data at 10 a.m. New York time, and then a little bit later, of course, we also have that key G7 meeting to discuss Afghanistan. Now, onto our market story, and Chinese tech shares rallying for a second day. Sentiment was boosted by Tencent's stock buyback as Cathie Wood bought back into JD.com after a pretty strong set of results. So let's get more on this with our China expert, Tom McKenzie. Tom, great to have you. I mean, if you look at some of these share prices, they're up 5-6%. Is it only dip buying, or is it something more fundamental?
So it's valuations, certainly. So we look at the Hang Seng Tech Index, which is up just over the last 2 days, 9%. Kailey made a nod to that, of course. In terms of valuations, it's looking attractive. The RSI is suggesting that that index is heavily oversold. It's down about 40% year to date. So that is one catalyst, certainly. And we've seen that, in fact, mainland buyers have been buying up through the Stock Connect in Hong Kong. So the fact that the mainland buyers are enticed by this prospect as well is interesting. But you did say there's other catalysts as well that which we touched on. Tencent with that share buyback, 230,000 shares. By the way, Bloomberg Intelligence suggesting that that could go on until October, which will provide further support for Tencent as well. And then Cathie Wood dipping her toe back into JD.com after those solid earnings.
Yeah, of course, she's buying into those ADRs, and we're seeing a broad rebound in ADRs in pre-market trading here in the U.S., and that includes Didi, even though reportedly it's putting its expansion plans in Europe on hold. What can you tell us about that?
That's right. So Didi had plans to expand into France, the UK and Germany. Those have been put on hold now over concerns about regulators, lawmakers in Europe, predominantly UK, in fact, where lawmakers have said they wanted to scrutinise Didi's expansion here. They are concerned that there's going to be further oversight of their collection of data of customers in this market. The Daily Telegraph saying that they're going to put this on hold until for at least 1 year. There may be some headcount trimming as well in those markets, France, Germany and the UK. But of course, this is a company that's facing that regulatory squeeze back home as well. Data is front and centre for Chinese regulators still trying to get their hands around how secure Didi's data set as well. So for the moment for Didi, that expansion plan has been curtailed. Probably some upside for Uber, which would be facing that competition from that Chinese car-hailing service here.
All right, T-Mac, thanks very much for that. Tom McKenzie filling us in on the latest out of China. Now, Vice President Kamala Harris warned that China poses a threat to countries in Asia, but she reassured nations in the region the U.S. won't force countries to choose between the world's biggest economies.
Our engagement in Southeast Asia and the Indo-Pacific is not against any one country, nor is it designed to make anyone choose between countries. Instead, our engagement is about advancing an optimistic vision that we have for our participation and partnership in this region.
Joining us now is Bloomberg's Bruce Einhorn from Hong Kong. So, Bruce, do people just take her word for it? I mean, when you look at U.S. actions, our credibility isn't currently that strong, is it?
Well, I think the point that they're trying to make is that there's, the U.S. is focusing on this part of the world. We have seen that Defense Secretary Lloyd Austin was in the Philippines a month ago, extended an agreement regarding military forces in the Philippines, something that President Duterte had threatened to end. Tony Blinken's been doing a lot of talking with Southeast Asian leaders. So this is part of a broader effort on the part of the administration to show that the Biden administration is focused on Southeast Asia.
Bruce, how much does China actually think that it'll get a free pass because of what's happening elsewhere in the world? It feels like they're much more aggressive in terms of going after the U.S., going after regulation since President Trump left.
I think there was an expectation among many people that President Biden would take a softer line toward China as opposed to his predecessor. That hasn't happened. In fact, President Biden seems to have really ramped things up. And in Vice President Harris's speech today, she did make a point of talking about the threat that Beijing poses to the region, thanks in large part to its actions in the South China Sea. So I think that what we're seeing from the Vice President now in Southeast Asia is part of this effort to sort of rally countries as part of a broader effort to address what the Biden administration thinks of as the China threat.
Thank you so much for joining us, Bruce Einhorn, there in Hong Kong. Now, UK's Defence Secretary Ben Wallace has also acknowledged it's unlikely that the US will extend an August 31st deadline for leaving Afghanistan. This comes as the situation on the ground grows more dangerous. Jake Sullivan, US National Security Advisor, said in a briefing that the US is on track with its evacuation efforts.
The question is, are we on track to fulfill our objectives of this operation, to bring out our people, So many of those Afghans who helped us, and so many of those Afghans at risk. And we believe we are.
Joe Matthew, Bloomberg Washington correspondent, now joins us from our D.C. bureau. Joe, how likely is it that actually this gets extended, given the Taliban have said, no way you're sticking to that August 31st, or it will get ugly?
Some would suggest that it's a lot less likely this morning, as we hear from the defense minister in the UK, as we hear as well from the chair of the Intelligence Committee in the House, Adam Schiff. But look, this is a minute-by-minute, hour-by-hour situation here in Afghanistan. That's 1 week from today. Are they going to be able to get that many people out? Because obviously this is an administration that has promised to get every American who wants to get out of the country out of the country. Some think that can be done in the next week. But what about the Afghan allies who are still in the country? That remains a big question. Jake Sullivan yesterday, if you listen to his words, started to change a little bit the way he was referring to that, making clear to reporters in the briefing room that the United States will go back, even after the military leaves, to continue evacuating our Afghan allies.
That's the situation evolving abroad, Joe. As for the situation evolving on Capitol Hill, Nancy Pelosi is trying her best to wrangle her caucus. The moderates giving her some pushback. What is her next move on Biden's economic agenda?
We're going to find out, I guess, about noontime today. This is not the first time that things went into the wee hours. Lawmakers were arguing about this. Democratic lawmakers, to be clear, arguing about the process and whether they should vote on reconciliation, the big $3.5 trillion deal, or the bipartisan infrastructure deal that is already passed. They're deadlocked here. It's not clear that Nancy Pelosi has the votes. They did not take a procedural vote that was first scheduled for last night. They're going to come back together at noon today to start again. But keep in mind, lawmakers are supposed to go home tonight, so this could be a pivotal day in the effort to get infrastructure in the U.S.
I'm sure the lawmakers are eager to get back to their summer recess. Thank you so much to Bloomberg's Joe Matthew in Washington. And of course, you can listen to Joe every weekday on his radio program, Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. Now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. A big one to the upside is Palo Alto Networks, of course, the cybersecurity company. It reported after the bell last night, gave a revenue forecast that topped expectations. Analysts really said it was strong across the board, and as a result, that stock up 11% in early hours. And it's giving a lift to other cyber-related stocks as well, one of them being CrowdStrike, although CrowdStrike is getting an added boost because we got news overnight that it is going to replace Maxim integrated in the NASDAQ 100 index. That change will be effective as of Thursday, August 26th. That stock up about 5.3% in anticipation of that. And I was mentioning, as Tom McKenzie was mentioning, the boost we saw in Chinese technology shares, and that is true for the ADRs here in the U.S. in pre-market trading, one of them being Alibaba, up 5.2% before the bell, Francine.
I like Alibaba. We'll spend a lot more time looking at Alibaba. There you go, 5% higher. Coming up, Geoff Yu, BNY Mellon Senior Strategist for EMEA Markets, and I will talk about tech in China and elsewhere. And then a little bit later today, Bloomberg also holds a webinar with the Bavarian Premier and leader of the CDU's sister party, the CSU, Marcus Söder. That's at 8:30 a.m. in New York, 1:30 p.m. in London, and this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kailey Leinz in New York. Now, our star producer in New York City, Daniel Curtis, put together a chart showing a couple of things that we might want to really be paying some close attention to. The Baltic Dry Index, on the one hand, rising to a decade high in white here. I'll welcome our Bloomberg radio listeners, by the way, on London DAB Digital. You can't see this, but you know shipping costs have absolutely soared, and that's why the Baltic Dry is so high. On the other hand, I've got a blue line that was up there for a while, but has turned over, and this is PMIs. Globally, we're seeing a little bit of a dip led by the U.S. and the U.K. So are things turning around? Joining us to discuss is Mark Cudmore, Bloomberg macro strategist and co-anchor of Bloomberg Markets, the European Open. Mark, think about this. What does the rollover in the PMIs tell us?
Well, I think that we've got several things that are there that are interesting. First of all, US was kind of leading the PMI's exuberance that we're seeing on growth over the last couple of months. And US is now leading the downturn. And this is really a kind of a facet or a reflection of the changing dynamics around vaccination rates. US had led kind of vaccination rates the first part of this year. They've really stagnated around 50% of the country is fully vaccinated, just over. And they've stagnated around those levels. And Europe and UK have surpassed them. And that's why the European PMIs are holding up a little bit better than US, and I think this reflects the narrative that we're going to see in the second half of this year. We're changing from a world where global growth, a wonderful global economic recovery, which is being led by the US, is now going to go to a world where maybe it's time for the rest of the world to take the lead a little bit. I think it's not that the US growth story is turning negative, it's just less exuberant, and I think there's a chance that some other parts of the world might hold up a little bit better.
Yeah, I was going to ask Mark, actually, if you look at the sea of green that we're seeing, could Jackson Hole put a dampener on these operations?
I mean, definitely it could. Look, the narrative at the moment, very short term in the market, is this idea that, hey, wait a sec, maybe if the US growth isn't so strong, well then the inflationary threat's not as bad as we feared, and maybe that, if the Fed stays super dovish, it's not necessarily a policy mistake. Maybe they'll never need to hike rates again. There's always been a small cohort of the market that have thought that. Now that's still a tiny minority, but it's a growing minority. I don't think this narrative will last. I don't think it's sticky. I think that we will go back to this idea that, wait a sec, the US really does need to kind of move more hawkish in the months ahead. But at the moment, that is the narrative that people are getting excited about as we go into Jackson Hole, which I think is interesting. And there's certainly a growing idea that, look, there's no way Powell will announce tapering this week. Yes, he's going to open the door. Yes, he's going to provide optionality, but he's not going to pre-announce a certain date just yet.
Mark, I love extremists, conspiracy theorists, reactionaries. What is this group of people who think the Fed is never going to raise rates again? Because we've had a spate of this in the past post-Great Financial Crisis.
Well, look, it sounds like a real fringe and crazy theory, but just look at Japan. Look at Europe. Like, there's lots of economies in the world that kind of, once they go into this spiral, Switzerland's another good example of this kind of, once they kind of break the zero low bound, get down there, and the US has not broken the zero lower bound, but once we get down to these kind of extreme monetary policy, it's very hard to get out of it. And another kind of factor of this is, the central bank balance sheets. Yes, the Fed started managing to taper a little bit last time, but I think people are pretty critical about how that was kind of handled and wonder whether they'll be able to do it again. So, look, it is a minority, but it's not a completely fringe idea. I think the Fed will have to hike rates again. But how much will they hike? I can kind of have sympathy with the idea they won't be going very far.
Mark, just quickly, of course, you're over in Asia. The PBOC has pledged its own policy support in China. Do you think the buying of the dip in Asia can last?
Look, it's a really tough question. I think it depends what time span you're on. I think that shorter term, look, the market's become very, very discounted and people are kind of going, maybe there's a little bit of a chance here. But has the regulatory crackdowns, have those policy moves ended? It's hard to have any clarity of this, but I don't see any reason to presume they've ended yet. The issues they're concerned about, expensive property, healthcare, education, these issues aren't resolved. So I'm going to assume that we're going to get more crackdowns in the coming months, and we might get lower prices. Longer term, though, I think China does provide some exciting opportunities, given how discounted assets are there compared to US, for example.
Mark, thank you so much. Smart Conversations on the Markets with our very own Mark Cudmore. We'll have plenty more on the markets. We'll also look, of course, at foreign affairs with Afghanistan and the G7 call. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Matt Miller in Berlin, Kailey Leinz in New York. Matt and Kailey, we've had some pretty optimistic calls on the S&P 500. We were talking about Morgan Stanley saying, for example, buy some of the travel and leisure stocks, but then this really bold call by Wells Fargo actually saying the S&P will touch 4,850. This would definitely be a record high.
Yeah, just rolling across. Sorry, I mean, Kailey, you spotted this. I just wanted to point out, it's just rolling across the ticker. So this is breaking right now. And Kailey, you were saying there are a couple analysts out there who are still forecasting targets of less than 4,000 on the S&P for the end of this year. Wells Fargo had been one of them, but they've now upped the ante.
Yeah, Chris Harvey over there had a 3850 target on the S&P 500 for year-end previously. He's now upped that by basically 1,000 points, but you still have others like Savita Subramanian over at Bank of America down at 3,800. But the index is already north of 4,400, so I think a lot of strategists are having to play catch-up here, given how strong earnings have been. It's a lot more positive a story than I think many anticipated, Francine. So Wells Fargo might not be the only one to up their target in the coming months.
Yeah, this is for the 2021 target. No one cares, Kailey, because you're getting married on Saturday, and there will be broken hearts across the newsroom, and Matt Miller probably has advice for weddings.
Guys.
Look at that, Kailey.
Jack. What a great
Saturday.
picture.
We'll have, yeah, beautiful.
you.
Congratulations, Kailey. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Matt, we had that really pretty important call, actually, from Wells Fargo, expecting the S&P 500 to touch 4,850 in 2021. By far, actually, the most bullish call on some of these markets.
Yeah, I think it's really fascinating. And, you know, as Kailey pointed out, I think we're going to see a lot of other strategists have to follow suit. We have strategists from Stifel Nicolaus, from Bank America, with targets of less than 4,000, but everyone else is right around 4,500. Some are a little bit higher, and now this is the highest forecast. I also wanted to point out, we didn't really explain why we were showing the fantastic picture there of Jack and Kailey. Kailey will be leaving, obviously, to get married. She's not going to do it on air, so she's going to, this is her last day with us for a little while. And, you know, Kailey, Francine asked if I had any advice for you, but my advice obviously is not for you. It's for Jack, actually. And it's just so cliche, but happy wife, happy life. He just needs to do whatever you tell him to do.
Perfect.
And then everything is going to be fine.
I hope he's awake and watching right now.
Yeah, if not, we'll send him the clip, as we always do on social media. Kailey, the reflation trade, apart from happy wife, happy life, which I 100% agree with, reflation trade back on.
Yeah, I'll try to get back to the markets now, Francine. Really strong rebound, strong handover from Asia, and we are seeing follow-through risk on sentiment in Europe and the U.S., though the gains aren't quite as large. Right now, the stock 600 is just in positive territory by only around 1/10 of a point. We're up about 0.3% on, or 0.03% on the stock 600 at the moment, so that is well off session highs, and we are off session highs in futures trading as well, but still positive. We're up about 0.2% on S&P E-minis. A little bit of selling in the Treasury market, yields up just about a basis point. We're sitting at a 10-year Treasury yield at 126. And then, of course, crude continuing its rebound. WTI up 5% yesterday, up another 1% this morning. Right now, trading at $66.30 a barrel. As for some stocks moving in pre-market trading, of course, we've had a lot of conversation about the rebound in Chinese technology shares in the Asian session, and that is following through to the ADRs here in U.S. pre-market trading. You have the likes of JD.com up 8.3%. Of course, it reported strong earnings yesterday. Cathie Wood coming in to buy those shares once again. You also have Alibaba, Baidu up around 5% each, and then DD Global up 6.5%. Yes, it may be putting its expansion plans in Europe on hold, but it's still taking part in the broader rally this morning. And of course, another stock we've been paying attention to over the last several days is Pfizer, after the FDA approved its vaccine, boosting sentiment not just in terms of Pfizer shares, but really across markets. For more, Bloomberg's Ritika Gupta is joining us now. Ritika.
Thanks, Kailey. You're right. That FDA approval of Pfizer and BioNTech vaccine, a big boost for equities globally, a stark reversal to what we saw last week when there was a slump, a lot of concerns about that Delta variant. But the idea now that this could be globally significant, because there's been a lot of vaccine hesitancy within the U.S., and that could have really dragged on the global outlook. But this is giving more credibility to it, the idea that this could boost the immunization drive and actually make it legally enforceable for companies to mandate the vaccine. And we've already had several companies from Chevron, Facebook, Alphabet requiring workers to get that vaccine, and the idea that this could now encourage more companies to do so, something that President Biden also alluded to. It's also a very positive for that reflationary bet as well. We saw that Russell 2000 outperforming yesterday. It has been underperforming the S&P 500 over the past couple of months.
And Ritika, then we heard from Morgan Stanley, buy travel and cruise ship before October.
Yeah, Francine, a bullish call here from Morgan Stanley's Andrew Slimman. He is saying buy into that reflationary trade before it is too late. So he is snapping up those cruise lines, those restaurants, those casinos, some of those energy and reflationary plays. And he really cites three reasons for this. One of them is that basic idea of rates. He sees a floor coming to rates and that they're going to be moving higher over the next few months. He wants to get ahead of that. And of course, higher rates tend to be good for that reflationary trade. Another reason as well is that there's a lot of cash sitting on the sidelines and investors not sure what to do with that money. So he doesn't see for that reason that there's going to be a pullback in the S&P 500 coming anytime soon. And of course, also just that buy the dip mentality questions why investors would go to expensive tech shares or growthier names with those high valuations when you could go for some opportunities in some of those cheaper cyclical and value plays. Francine.
Ritika, thank you so much. Rika Gupta there with some of the roundup that we're seeing from analyst notes. Now, joining us is Geoff Yu, Senior Strategist for EMEA Markets at BNY Mellon. Geoff, good morning, first of all. I mean, some of your calls are actually outlier calls, but is this a buying the dip or is this actually the restart of the reflation trade?
I would call it this week, at the very least, a reversal of what we saw last week. It was a very heavy risk-off tone, worries about growth, worries about the cycle, and of course, Jackson Hole. So as we head into Jackson Hole this week, we are reverting to the mean, and at the same time, I think people are just acknowledging maybe this is not going to be an overly hawkish Fed, but I would caution that cyclically the world is still not in a great place. So these really risk-on calls, we need to be clear. Is it because of easy policy or is it because global growth is strong? I'm inclined to think it's simply a policy bet.
So, Geoff, what do you worry about? If the world is not in a great shape, but actually markets are telling us that it is because of vaccination rates and the Pfizer FDA approval, what do you worry about?
So I worry more about the global growth cycle. I mean, over the last 2 months or so, we've been worried about China's regulatory crackdown, and we're seeing the tech shares rebound. But consumer sentiment is weak. Yes, the Delta variant's probably under control in China, but has it happened in time to save the October holiday season? As we head into September, is there going to be a late year reflation stimulus coming from the fiscal side? I don't think so. Hence, if we have Europe sort of plodding along, US wondering what to do up ahead, and worried about Delta picking up, and China at the same time not reflating as well, the simple question is, where is growth going to come from? And are we going to head towards stagflation? So I think this is the matter that risk-on markets need to resolve by the end of the year.
Where do you fall in the China debate? I mean, this morning and over the last couple of days, we've heard people saying it's uninvestable. Others saying that's flat wrong. Obviously, we're not talking about for all eternity, but in the short to medium term, if they just change the rules on capitalism the way they have, it seems a little bit dangerous for Westerners, Geoff.
I'm on the that's flat wrong camp. So if you look at the medium to longer term, even the shorter term, we have a new round of index inclusion coming through on the bond side as well. The equity index inclusion, those flows on a passive basis, we are seeing it in our own custody data. And the fact is, yes, you can be squeezed back into the US, but markets are underweight Asia, markets are underweight EM. And actually, that's where a bit of the value is right now. We like Asian currencies, Asian economies, which are trying to reopen. Singapore, Thailand, for example, even Australia, they're starting to change their tone on things. And China will need to reopen as well. But it is a growing market. It will be the world's largest economy over the medium term as well. So flows will head into that direction. From Beijing's point of view, they are learning to communicate better. We will see that too.
Well, what about, where then? I mean, in the U.S., buy the dip has been the right strategy, and the mega cap tech stocks have been the big winners. Are mega cap tech stocks in China a safe bet, or are those the very companies that Beijing wants to, I don't want to use the word crush, but, subdue?
I think tech, mega cap tech, and they are facing regulatory issues globally. in terms of in terms of having a monopoly over the market position, over data. That is something that's being addressed in the US, in Europe, and China as well. A lot of people have highlighted that China's recent data protection laws, their model of GDPR, right? So Europe actually got there first. So these things will take time to iron out. Now, what I'm looking for in terms of equities right now, one phrase, pricing power. And the reason I think why the US is outperforming right now is the PPI-CPI spread is only around 2 percentage points. So that means companies can pass on their costs. In China and Europe, we're talking about 9 percentage points, right, or even wider. So this actually really hurts companies. They're facing high input costs. They can't pass it on via CPI, so their margins are going to be heavily restricted in the shorter term. So as long as US can actually maintain that cushion, then US stocks can outperform. But again, I ask, where's the cycle going?
Of course, Geoff, the performance of U.S. stocks is largely dependent on the performance of U.S. technology stocks, which, as we know, are pretty vulnerable to higher yields. The question is if we ever do get those higher yields. Do you think so?
Well, so the Fed will take it very, very, very slowly. And then the second point is higher yields at what part of the curve? And I think we need to acknowledge if the Fed is going to start to tighten, you're going to see the long end of the curve. You are going to see yields actually come off because by definition, that's going to restrain the economy. And if these tech companies, if they're looking over the medium to longer term, if the financing cost of capital is more tacked on to the long end of the curve, then they should be okay as well. And I think that's one of the strengths that US mega cap tech will have over the rest of the world in terms of their cost of capital.
Geoff, thank you so much. Geoff Yu, their senior strategist for EMEA Markets at BNY Mellon. Now, coming up, hedge funds hot again. The industry is off to its best start since 1999. Investors risk missing out, though. So more on today's big take story. That's coming up next, and this is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin. Now, global investors have a new tool to hedge China risks. The Hong Kong Exchange has received a long-awaited clearance to offer A-share index futures contracts in collaboration with the MSCI. Now, we spoke exclusively to Henry Fernandez, the chairman and chief executive of MSCI.
There's always been a lot of talk about that with every emerging market in the world. There's been a time in which Indian shares have been called uninvestable, and there was a time in my distant past in which Mexican shares were called uninvestable because of various actions by the federal government or the central government in those countries. We have seen the regulatory compliance wave in China happen every 3, 4, 5 years, and obviously the markets have sell off at the time. But very quickly afterwards, the markets have recovered and gone to new heights. So I think we got to look at this process that the Chinese regulators are going through in the prism of the last 10 years and also across other markets in the world. There's been a lot of criticism of China in terms of lack of compliance, of lack of regulatory oversight. So they're now exerting their regulatory oversight. So we criticize them on the other side as well. Clearly, we have to see how it all shakes out. But I think it's important to keep in mind that countries go through periods like this. There's no country that is exempt about this, including Western countries.
Does the nature of the regulatory crackdown, the volatility of Chinese markets and what authorities are trying to do there, does it change the tone and also the timing of discussions and approvals? I'm wondering if, approvals get a lot quicker, are they sped up, when there is this sort of regulatory attention being paid?
I think there has to be some effect of that in times of volatility, for example, like this one. It's even more important, as I said, to have the right exposure tools and risk management tools and hedging tools for the market. But I think this whole process about approving the launch of an A-share futures in Hong Kong has been long in coming. So it was much more of a secular perspective than a moment in time. We have been working on it for the better part of 4 years. And obviously it came down to the two regulators and the exchanges making sure that this was properly structured and of service to the global community. So as I said, there has been a missing link here in Hong Kong. Hong Kong has developed a great ecosystem of ETFs and obviously the cash market through the Connect program into Shanghai and Shenzhen. Hong Kong is the largest structured products market in the world, including exposure to China, and obviously a great trading center for the yuan. So the big missing link was the derivatives market. So we have been, working with the regulators and the exchange to get to that point in building this ecosystem that all of it together is greater than the sum of the parts. So we're very happy that is taking place now.
An exclusive conversation there with Henry Fernandez, Chairman and Chief Executive of the MSCI Index. Now, Tom Keene, co-anchor of Bloomberg Surveillance, joins us. Tom, if you look at some of the charts, I know you're looking at Apple today, and then, of course, we talk about inflation and the difference to what it means if you're a manufacturing-based economy or whether you focus on services.
This is a sobering thing. We're going through it right now with Jeff Bezos' Amazon. If someone leaves a company, a founder leaves a company, somebody who's so identified with the company, Francine, it will all fall apart. Well, it did not for Apple. 10 years ago today, Steve Jobs, grievously ill, stepped aside at Apple here with the iPhone 4 in 2010. And it was clear, Francine, Apple will fail without Steve Jobs. Let's go to the chart. And it's real simple. We know that in hindsight that did not occur. The illness of Mr. Jobs in 2004, on to his death in October 10 years ago, and just before that, his resignation. I remember the day, Francine, very clearly. And up and away with Mr. Cook, who's done better than good at 29% per year.
Yeah, I will never forget either, Tom, but I have to ask if Tim Cook has gotten just plain lucky. I mean, if you look back over 10 years, Facebook has outperformed Apple. Tesla has outperformed, more than doubled Apple's returns. Right. Microsoft and Amazon have outperformed. Netflix has more than doubled their returns. So, all of these mega cap tech stocks have done better.
I was asked to go out to Cupertino, buy Apple, I think in 2009 with Emily Hoscotzel. And I sat, Matt, under the platinum record of Gwen Stefani and realized that none of this was luck. It was about a massive delegation of authority by Mr. Jobs. He learned that the hard way in terrific failure. But Cupertino is the mother of all buildings where people delegate authority and then make final decisions after a lot of people think really hard. That's the pixie dust that Mr. Jobs invented.
Pixie dust, and what a wonderful chart. Tom, thank you.
Sure.
Tom Keene, their co-anchor of Bloomberg Surveillance. I know he'll also be looking at inflation. What's on your radar for the rest of the day, Matt?
Well, I'm going to watch Surveillance because I can't wait to hear Tom's words of advice for Kailey and Jack. She's going to join the Surveillance team today, and then she's going to go off and get married, and I'd say over 20 years, I've taken more advice from Tom than pretty much anybody else at Bloomberg. So I'm interested to hear what he has to say. I'm also going to be watching, congratulations, Kailey. And I love this picture. And the guy was so smart. He did this at a family picture session, which is genius, because then he had a professional photographer there for the engagement. I'm going to be watching what's going on in this conference call. Boris Johnson has urged President Biden to keep troops in Afghanistan beyond the deadline. The Taliban has said that's a no-go. But we're going to hear today how a G7 conference call goes between these two leaders.
Okay, I'm just looking at markets, Matt, because we had that call from Wells Fargo on the S&P 500 target. They were upped. I wonder whether more brokerages or more banks will actually have to do the same. More Bloomberg Surveillance is up ahead. We'll hear from Eric Friedman of U.S. Bank and Saira Malik, Nuveen, Global Equities Chief Investment Officer, amongst others. This is Bloomberg.